Right. So the first thing I wanted to compare these two on is revenue and revenue growth. And I went all the way back to 2016 and noticed a couple of big things about these companies, notably the volatility in car sales. That's to be expected. These are cyclical businesses. When you go and get a job, you get a new job, you're more interested in buying a car. If you get fired or if you're in fear of losing your job, you're not going to go shopping for a car. So car sales are highly correlated to macroeconomic growth. When the economy is doing well, people are buying more cars. When we go into a recession, people are buying fewer cars. And so businesses like Ford and GM experience those ups and downs. However, over the previous decade, they've increased their revenue to $173 billion, up from around $140 billion. In this time, they've grown revenue at a compounded annual growth rate almost identically. 2.3% growth for Ford, 2.4% growth for GM. Very slow growing businesses. These are mature industries. The number of car sales are increasing worldwide, yes, to be sure, but Ford and GM are losing market share to international competitors, especially from China, as that country's been able to gain significant market share in the car industry, as they've capitalized on the electric vehicle industry and gained significant market share, able to produce lower priced EVs and lower priced cars overall, while Ford and GM are losing competitiveness, especially in regions outside of North America. So that's led to an unattractive industry. You can see here 5.5% operating margins for GM, just 1.6% for Ford, and these margins are declining for several years, and they're likely to continue declining, especially as they will have to pay a higher price to import goods. Even though they're US manufacturers, they still import many components, machinery, etc., steel, aluminum, all of that. The companies will have to pay higher prices for these, and they have manufacturing facilities outside the United States as well. So now let's look at valuation. I calculated a fair value for these businesses, and Ford looks to be selling at a fair value, not too expensive, not too cheap. $11 intrinsic value compared to the current market price of $11.42. Similar with GM, selling at a market price of $57, intrinsic value of $54. Applying a margin of safety, this stock also looks fairly valued. But if I had to pick just one of them, and you forced me to pick one of them, because I wouldn't want to own either of these companies right now. But if you forced me and I had to pick one, I would pick GM as the better stock to buy today. Click the link below to watch the full video.